Hi, everybody. I hope you're doing great. Today, we're going to cover the weekly triple Qs for November 2nd, 2020. So let's just jump right into it. The previous week, brutal, brutal. We projected it was going to be volatile. We thought it'd be up at the beginning of the week and down the ending of the week, but it was down pretty much all week. Had a little bit of upswing midweek and then crashed again end of week. Uh, this week, we're expecting it to be continue to be volatile and continue to pull back. The reasoning: election, elections on Tuesday in the U.S. There's been a pullback. Dow Jones are at COVID levels, meaning they're starting their drop, which happened in March of 2020. So it's looking like a general pullback, really because of a drag on the external factors. Election being one. The second is the realization that the stimulus talks, which is the economy or the market has really been built off of over the last couple of months. The continuation of the stimulus isn't going to happen until more than likely next year, which means housing, mortgages, rents, PPP, and all those things that people have been using to help rebuild the economy are not in play for at least 3 to 4 months, which is really going to hurt the market, in our opinion. We see also that calls and put volume is near even, meaning there's not people buying just as many puts as many calls. So really, the market generally is uncertain about which direction it's going to go in. But we do see that stock volume continues to decline. It's pre-COVID. Let me rephrase. It's in the pre-COVID levels, which was a pretty small volume anyways, and it's continued to decline into that. There was a ton of volume during the March pullback, and then that volume has been continuing up until now. When all of October, there's been a general decline in stock volume for the triple Qs. Let's talk about the earnings a little bit. Last week, the greens are the ones that we thought would do well, and the reds were the ones, or the oranges we thought would do okay. There was no real reds or any that we thought would miss dramatically. Microsoft, Amazon, Amgen smashed their quarters, gave some interesting guidance for Q4. Microsoft was like a minor guidance adjustment, not even a guidance adjustment, just a discussion point about Xbox volume, and that made their price pull back. To be honest, I think the market was just generally looking for a reason to pull back because of all the uncertainties that were happening within the general macro environment. Stimulus, elections, COVID, so on and so forth. So Microsoft could have not said that statement and it still would have gone down. Apple, pullback, same. Facebook got pulled back as well. Twitter got crushed, missed their numbers. Interesting, their Q4, they're growing like gangbusters for their Q4. And what we talked about last week was that Q3 would probably be rough for some of these to flat, but their Q4s, they're accelerating through them. So we'll see if that continues to be the case over the next couple of weeks, especially with the lack of stimulus and COVID coming back in the election. But as of this moment, they're still accelerating their growth through Q4. There's two big ones happening this week. And when we talk big ones, we're talking about anybody that has more than 1% of the holdings. So PayPal has almost 2% of the total triple Q holdings, and Qualcomm's 1.25%. PayPal we think will be green. Qualcomm, they're tying into the whole semi IP space, and that's kind of an orange. We think PayPal will do good. We don't think Qualcomm, with all the economic conditions and other chip manufacturers, is not going to have a great Q3 and may give adjusted guidance for Q4. They're not growing like the traditional things. So earnings was rough. Triple Qs with unusually high volume. Kraft Heinz, surprisingly, Kraft Heinz is part of the Triple Q. Who would have thought? They have a large call anomaly for April 16, 2021 at the $37.50 strike price. It's about $25 per contract, which is pretty reasonable, and it's 1.3 times the volume to the interest. So we look at how much volume is greater than open interest, and that is a sign of unusual option activity. Zoom, people are betting heavy that Zoom is going to decline over the next 8 months. 3.4 times the open interest volume, which is a very large discrepancy, or it's very unusual. $300 strike price, and the contract price is huge, $2,275 per contract. Just to note that prep2grow did release unusual option activity this week, and so all of our subscribers will start to get daily unusual option activity recommendations, and so expect to see those tomorrow. 30-day stock price. This graph looks worse than it was. Obviously, a dramatic drop off towards the end of the week for the FANGs. Again, prep2grow separates out the FANGs Plus from the others. The FANG Plus, we also add Twitter in it, even though it's not part of the QQQ. But the FANG Plus collectively accounts for 65% of the total holdings for the QQQ. So if they do bad, everybody does bad. What we've seen is that the FANG Plus have done worse in their stock price over the last 30 days than the rest, the 35% other. The FANG Plus, their average for the week in terms of price drop was 0.5%. The non-FANG, the others, was roughly 0.1%, so not a whole bunch. But over the last 30 days, consistent decline in stock price from end to finish. Our 30-day predicted stock price, we're looking at a buff coming out of the pullback based upon our Q4 predictions. So we feel that certainly there was a pullback, but again, the FANG Pluses are really accelerating through their Q4. The others, a small growth, pretty much flat for the next Q4. However, the FANG Pluses move the QQQs, so we view the QQQs again are going to do great through their Q4, which is what our algorithms and predictions show. 30-day stock volume continues to pull back. The non-FANG Pluses more than the FANG Pluses, but again, you're starting to see just kind of an upward tick in stock volume for the FANG Plus. We'll see if that continues, but these are very much pre-COVID levels. The non-FANG Plus are actually at levels from way back in January 2020. So just be aware there's a lot of volume occurring within the others of the non-FANG Pluses. If we look at the 30-day option volume, we see kind of a weird adjustment when the FANG Pluses pull back from the Q3 earnings. It looks like a lot of folks started to buy options, call options on them, and put volume started to drop. The reverse is occurring for non-FANG Plus, which is interesting because we see that the FANG Pluses are probably going to be the less volatile, more stable over the next Q3. Again, not a lot of growth, but flat. So collectively, we see that people are bullish on the QQQ over the next 2 or 3 months, which is not supported by the data. 30-day call versus put predictions. We see a pretty even split between puts and calls for the FANG Plus, the ones that we predict on a daily basis that have greater than 80% accuracy in terms of getting the price right day after day after day. The others, certainly an uptick in calls versus puts. I think generally the non-FANGs are more stable and maybe are expecting more growth as they cycle into things like Kraft Heinz, right? Which is not a non-tech, which is not a tech play. So maybe pulling out of tech into more non-tech plays like Monster Beverage or again, Kraft Heinz. If we look at the volume for year to date, this looks a lot like March, right? So a huge bump in puts, February, a huge, March, I'm sorry, a big bump in March in terms of puts and starting to get a decline in calls. So very similar pattern to March, which reflects the data in the macroeconomic situation that we're seeing. Again, elections, COVID, no stimulus. So this really is one of the main reasons we feel that the pullback is going to continue, because it looks a lot like March. So again, the net is continuation of the pullback, starting to look like March of 2020, all-time high COVID cases, no stimulus in sight, elections, so a lot of confusion about what's going to occur out of that. So it's going to be another difficult week for the triple Qs. So invest wisely. We wouldn't recommend doing a call or a put on the triple Qs for the weeklies, but it's really up to you if you want to take that kind of risk. We appreciate your time. If you enjoy this content, we would appreciate a like and a subscription, and more details below in the YouTube video description. But as always, we really greatly appreciate your time, and any feedback you have is welcome. Happy trading.